the stop on that one. Thank you. This was the first trade that Michael Ramos took, and he got in at 52 1/4. Entered well. The rest of you could have gotten in at 51, 51.50 and done quite well too, and you could have picked up 8 to maybe 16 plus ticks off of that. A value area trade right here, value area high, but we do get that retest of the high right here, which is what we were waiting for. So you could take the trade at 40.75, 40.50, or if you'd sold the value area high, you were in at 50.75 to trade back at least to the mean green line. So these outside in trades work. We've had strong buying up here, getting long against the mean green line. It's just a trade that you take. You're long a tick inside it. You fade it. A lot of buying behind you, and you're in that one at 46, 46 1/4, and the market trades back to 51 for plus 8 to 16 ticks. So there's really, really good trading if you just trade what you see, as Bill Thomas would say. It's expected in the note, Max. On the E-mini, it's usually plus or minus 4 ticks. So when you get it to the tick on the E-mini, it has more significance than it does on the note. On the note, I mean, that's just business as usual. A retest to the tick. So a green dot won't catch your eye on the note. A green dot should catch your eye on the E-mini. So anyway, had good trades to the long side based on the news. The news was bullish. You're not going to get short until you get a retest of the high. So we make a new high here, make a new high there, make a new high here, make a new high here, and then on that bar we don't. And over here we don't. So we're not interested in getting long or short until we've retested support or resistance. Okay, we're dealing with a P. If we put the day session with the news on it, we'll play with these splits a little bit. Okay, if I take out Y through A, which is when the news hit, when we look at the B split, it's starting to turn to a B in the congestion area. With where the volume is at 1249, it's still a P, but that looks like that's going to change right here pretty quickly. If I fold this in, definitely a P. And if we come in and do this with a D split, we might be starting a new distribution lower right and lower right here. So it's in playing with these distributions and getting them set up right that you'll get the information that you need. So splitting is very, very important. Okay, I don't think there's a lot to say in the note. I mean, if the E-mini starts to sell, it'll probably get stronger right here. But it's just really tough to stay above 130.28. I mean, we just that's been a pretty hard barrier. And the problem is that we're looking at a 2% 10-year yield. And that's pretty darn low when it's all said and done. So it takes a flight to quality situation to take this thing higher than hold it. And it doesn't hold it for long. I mean, it probes up there and it'll go, but it doesn't hold those levels. So the 2% 10-year yield is what's probably driving the market right now. So what does this look like when we start to combine distributions? Got a pretty strong P there, less so, but it's still a P nonetheless. When you go into the congestion area, you can see that all the volume in the congestion area is in the bottom half. If we go here and we do an E split off this longest line of letters, that's what it looks like. So we're in a situation where this market is trying to trade higher, and we run into this barrier you can see right here, pretty stout at 28. You can see how little time we spent above 28 right here. There's your 4/5 letter ledge. Now mathematically, right here's the value area high, but these 4/5 letter ledges are where the market has traded and where we are. So again, we're still looking at a P when you put all of this together, but when you go inside the congestion area, you can see that this market hasn't had any trouble trading back down to that 129.24, 129.28 area. But you just kind of get in and play with these splits, and you get it set up for what looks right to your eye. And the reason that's what you want to learn how to do is that you are unique. It is your time frame. It is your perspective. It is your way of looking at the market. It's going to be similar, but not quite what my way is. And your screens are you, and you've got to take it to that. Outside in trading has worked for us. So here's an outside in. Here's an outside in. And here might be an outside in. We don't know yet. The jury is out. Here's an RTF. There's an RTF. Here's a reverse RTF. What was resistance is now support. All small trades, market's not going anywhere fast. Here's an RTF that produced a little. The mean held, and I mean we're right here. So pretty quiet trading. Not a lot going on, waiting for something out of the E-mini. Okay, back this F5 screen, when you really become competent and confident that you can pick out levels right, it really will give you superior trade location. And this is a trade off of 1253. And you could have executed this one at 52.75 off of the rules that we have developed for trading this particular screen. This screen is fast. Some people ask, well, why is it a 6-tick reversal? Well, 5 ticks in this contract is noise. But Don Ailing, who was a very good short-term scalper trader, who came into the room as a 1 to 2 tick trader 20 to 40 times a day. So he had a real good sense and intuitive feel for the markets. Watching the tape over time, really loved to execute on this chart. Well, the problem with Don was that he could never reduce it to tradable rules that a novice or a beginner could understand. So the two rules that I've come up with is that when you see these white boxes, you place a fade order, a tick inside that white box, and right here you would have filled. The second way to trade it is a sell stop when you break support. And you would have filled, and both of them would have produced really good trades. So when you get these white boxes at a level that makes some sense, then placing a fade order or a tick inside of them works. So again, everything that we do in this room, you've got a you really have to appreciate the fact that we are discretionary traders. We do trade an idea at a level that makes sense. Well, obviously, Greg, you don't really want that one. You're not, and I'm not being condescending to you, but idea at a level, white box, then that's going to get you as close to the edge as you can get. And many times you won't fill. You won't get that retest that you're looking for. The white box just means that less than 10 contracts have traded at that price, and it can be a differential between two. So if you had 2,500 and 2,509 as the split at a particular price, you'd get a white box, and that would certainly be in the middle of a bar. Okay, on this screen, there's two concepts that we work with on deceleration. One, you want deceleration in the vertical. So the market comes down to a price and no one is really willing to sell it. Then on the retest, you want deceleration in the horizontal. So you've got 1,400 versus 115 right here. And you've got that deceleration in the horizontal. And when you take out that bar's high, or you might be long at the mean green line, sweating bullets right now. When you see this horizontal deceleration, the difference in volumes between those two. Obviously, you've got a higher low. Then you can take the trade to see what happens. And you can buy stop in, or you can try to get in by leaning against the green box. You'd have missed it right there, so that would have been a buy stop if you weren't pressing enough to buy the fade the green line. So that concept of vertical and horizontal deceleration is very, very important. Okay, Greg, this is the white boxes in the middle. I mean, I don't even pay any attention to them, but obviously, if you wanted to get in and trade it, I mean, if you faded those white boxes on the way down, you'd have made some money. I have never looked at that trade. It actually might be a pretty good trade. I don't know. So, Greg, your assignment, if you wish to take it, is to figure out what now a white box in the middle of a bar means, okay? Could be a great trade. I don't know. I've just never looked at it. I'm looking at the edges, but that might be a great continuation sign. Would be worth looking at. Now, right now we've got an unfinished auction at 45 and a quarter. Tells me when we come back down here, we're probably going to go get stops below 45. Well, we'll see what happens down here in this high volume area, if they can break 45 or not. 45.25 is an unfinished auction, and we'll see if it goes back down and knocks it out. Later.